I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good afternoon, T3 Live. This is your editor-in-chief, John Darsie, here to bring you the morning call. S&P futures are around the flat line this morning. If you look at your SPY chart and you say, John, what are you talking about? The spiders are down about 60 cents this morning. That's because the spiders went ex-dividend today. So if you look at your spider chart, you see the SPY's down 60 cents. Don't be alarmed. All it is the ex-dividend. If you go look at the chart here of the spiders, yesterday we broke above this 3-day mini range to close ever closer to all-time highs for the S&P. The Dow, as you probably know from reading all the headlines, is at all-time highs. We've had 10 straight winning sessions. Even though a lot of those sessions, the wins have been 1 point to 5 points, small losses. It's the biggest win streak we've had in the market since 1996. But in 96, all those winning days were a lot bigger, so it was a lot more impressive. But nonetheless, when you get 10 straight winning days in the Dow, it's still impressive no matter how big the wins are. But as traders, it's getting more and more difficult to look to initiate new long positions at these upper levels. It's you go out on the trading floor and somebody who didn't know much about trading would say, wow, the Dow's up 10 days in a row, the S&P's near all-time highs. This must be an optimum environment for traders. But in reality, traders are out there a little bit frustrated by the lack of momentum, the lack of calculated setups that we've seen from a trading perspective and a momentum perspective. But the NASDAQ has been a lagging sector over the course of the last 6 months, a year, largely due to weakness in Apple, which is the index's largest component. That's been dead weight on the market ever since prior to earnings, and then that weak earnings report sort of confirmed the weakness in Apple. But this morning, Apple is actually up several dollars. And yesterday, Scott and I talked several times and tweeted several times about how Apple was potentially a buy the news setup. Excuse me, let me get some water. I got some flu in my throat here. Was a potential buy the news setup on the Samsung Galaxy event, which was releasing the new S4 phone. And the event went off and the phone was impressive. It had some gimmicks and stuff like that, but I don't think it was enough to really crush Apple like a lot of people thought might happen with the Samsung event. So you go to the chart of Apple, and you see, we'll go to the pre-market here. We'll look at the 5 minutes so we can see what's going on. It's up near that 440 level, and that's the key level that we're going to be watching for a potential break of the downtrend. Excuse me. Oops, sorry. Now let's go back to the daily chart of Apple here, and you see that downtrend coming into play. 440 is that level that's currently the 21-day moving average, and it represents a break of that downtrend. So what we'll be looking for this morning is whether Apple can, get and hold above that 440 level. And if it can, I think you could see some momentum come into play. We'll zoom out a little bit here, zoom in a little bit here so you get a better look at it. This is the key level here that we've been talking about in Apple. Like I said, on Off the Charts last night, we talked about if Apple can shrug off this event, bearishness has sort of reached a climactic level with Apple. And when you get the herd mentality sort of in one direction, you could potentially look for a contrarian type move, and that's what we're sort of seeing in Apple today. We'll also take a look at the banks. There was news in the banks this morning. Take another sip of water here. The news actually came last night as the Federal Reserve announced the results of its stress test, where it took a look at the new capital plans by all these banks. And the two leading banks in this market have been Goldman Sachs and JP Morgan, and those are in fact the banks that had the weakest and got rejected by the Fed. Their new capital plans got rejected when most of the other banks got approved. There were some smaller other banks like BB&T and Ally Financial, both got rejected, their capital plans. But all the other banks got approved, and you're seeing weakness in, we'll go to the 5 minutes to take a look at it, weakness in Goldman Sachs this morning. You see it closed yesterday up here around the 154 level. Today, right now pre-market, it's about around the 151 level, 151.50, excuse me. JP Morgan also weak, as you can see from pre-market action yesterday. It closed up here around 51. This morning it's down here around 50. We'll go back to the daily chart. This is nothing to really be terribly concerned about in JP Morgan and Goldman Sachs, but the important thing is going to be to watch what happens today after that news. Is this going to be a buying opportunity that people see, or is it going to be something that leads to further weakness in the banks and potentially weakens the market? We're going to take a look at Bank of America, which is the one Scott has been pounding the table on long, and that is one that passed its capital plan with flying colors and is going to do a $5 billion share buyback, and it's also going to repurchase $5.5 million worth of preferred shares. And the stock is up very healthily pre-market. Take a look at the 5-minute. You have it up here around the 1257 level. If we go back and look at the daily chart, the high of this bar is 1244, so it's up here above highs. It'll be interesting to see what happens with Bank of America. Just like Goldman and JP Morgan, it'll be key to see how they act today after that news. But maybe we get an extension in Bank of America, but it's a little bit cooked here if you weren't in from yesterday, so I wouldn't necessarily buy it blindly today on this gap up to new 52-week highs, but it's definitely something to keep an eye on, and the banks will be something to keep an eye on today in general to see how they react to all that news. We're going to take a look at a couple leading tech stocks that are sort of giving us clues that momentum could be coming out a little bit, or you could say momentum might be coming out of the market a little bit, or you could just say that perhaps there's some more rotation going on, which has been healthy and something that we've seen drive this rally in 2013. But we saw LinkedIn yesterday. As sometimes you see with Goldman upgrades of stocks, you had Goldman upgrade LinkedIn yesterday after this monster move since earnings. And it's a little bit disingenuous, I would say, to be upgrading a stock after you see a move from around the 120 level to up to 180 over the course of basically a month since earnings. And maybe you saw that Goldman top tick like you sometimes see with Goldman upgrades after a stock makes a huge move. And LinkedIn yesterday still finished with gains. It finished up about 0.3%, but you saw a little bit of a bearish candlestick because you don't like to see a stock gap up to new highs and then go back and fill that gap. And it filled most of that gap, so we'll be watching closely to see what happens with LinkedIn today to see if it gets more downside, maybe test that 8-day, and then perhaps even if we see more weakness, that 21-day could come into play. And that wouldn't be unhealthy for LinkedIn. After a big run like that, you'd like to see some sort of corrective and rest type activity, but it's something that you could be on the radar for and potentially look to stop buying small pullbacks in LinkedIn. And Netflix is a similar situation yesterday. It also finished it held most of Wednesday's gains, but it did fill back most of those intraday gains that we saw during Wednesday's session after the gap up. And for Netflix, what we're going to want to watch is this gap right here for short-term composure. Potentially we could get a retest. The 8-day is very close right here. The 21-day is down here around 180.90. Let's take a look at it pre-market on the 5-minute to see where we are. All right, it's up a little bit with the market, so maybe we don't get that immediate follow-through, but it's something I would definitely keep an eye on. That first gap in Netflix, sorry, we got to go to the daily chart. That first gap in Netflix, and then if that breaks, you got to look down here at this cluster of support, and then ultimately, if this gap holds, it'll continue to maintain the bullishness of this chart, but it's something to keep an eye on in Netflix. And then Google has been more gradually weakening. It's been another leader in this market, making new all-time highs, sort of taking the leadership role in tech away from Apple. But over the past couple weeks, it has been just gradually weakening. You had this sort of breakout failure in Google where it opened here above highs here and then filled back down, and it's gradually just been falling slowly. And now it looks like it could test this 21-day moving average, which coincides with this prior breakout, which makes sense as a level for Google to potentially test. But the point I'm trying to make here is that we have some leading stocks that are showing a little bit of weakness, and it's a sign that potentially this rally is getting a little bit exhausted after 10 straight up days in the Dow. That would definitely make sense, but potentially you don't have to short this market just because it's not a long, but look to rotate your money into other areas or sit on your hands a little bit. Another thing to factor in is today is options expiration Friday. Because March 1st was a Friday, options expiration is coming a little bit earlier in the month than usual. Or March 1st was a Friday, if that's what I said. But beware of some sort of whippy action that you sometimes see on OPEX Fridays That's another thing to factor in today when you're trading. A couple other things we're going to take a look at. I talked about that sector rotation. One of the areas yesterday we saw rotation come into was the oil service sector. It's the OIH is the ETF for that sector, and yesterday you see this potent green bar in the oil service stocks, which is, it's very bullish to see that rotation. And the OIH has been one of the laggard sectors and is still below 52-week highs. It's still significantly below 52-week highs. You could see some money start to rotate into this group, as those tech leaders become a little bit tired, and you also see some mixed news in the banks going on. So we'll take a look at SLB, which is the largest of the components in the OIH ETF. And it has a little bit more of a calculated setup, I would say, than the OIH itself. You see it breaking sort of out of this little wedge pattern. A nice day yesterday. The bar wasn't quite as potent as the OIH, but I would look for SLB. I think this is a natural area for it to test first. That first hurdle will be around 79. We'll see. The high of that bar is 79.99. So around the $80 level is going to be key to watch if we do get more strength in the SLB. And then obviously this pivot high right here, which is 82, would be the next level to watch. But I think continue to look for potential rotation into the OIHs, as a sector that could see some money flow in as we see weakness in leading tech stocks. We're also going to take a look at the TBT, which is something Scott has been talking about a decent amount recently. It's the inverse bond ETF, and there's, a lot of people are expecting some rotation out of bonds into equities. Maybe we're seeing that a little bit, but still you haven't seen the volume in this rally to all-time highs in the Dow, and then the S&P's near all-time highs. You haven't seen the volume in that rally that really leads you to believe that you've really had that flood of money coming back into equities. I think everyone's still a little bit jittery about stocks after the financial crisis and the sell-off that we saw relating to that. But I think you could start to be seeing that. You see TBT creeping up here. It's gotten rejected at this level several times. You have this little open gap over here that would seem to be a level that the TBT would want to fill on its way to potentially higher prices. You see a little cluster of rest and consolidation here after a nice run over the last couple weeks. And I would definitely watch this pivot right here. The high is 69.64. I would definitely watch that pivot in the TBT if you start to see money flow out of bonds again. You start to see TBT tick up. We're also going to take a look at the FCX, which is a copper and gold miner. And it was upgraded this morning. We'll take a look at it in the pre-market. It was upgraded by Goldman this morning as they are bullish on the copper sector in particular. Gold, they also mine gold. Freeport-McMoRan does, but copper is a big part of their business. You see this pre-market strength, and I think you could. This is a laggard stock. Go back to the daily. Sorry about that. We'll go back to the daily chart, and this is, it's been a laggard stock. It's trading down near major support. It's getting a little bit of a tick up this morning, but I think you could see this one play catch up a little bit, and have this open gap right here that it filled part of that open gap and got rejected here at some small resistance from inside the gap, but you have the full gap up here. And I think this is one that you definitely, if you're looking to play a laggard contrarian type play, I think FCX is one that you could take a look at. And then also taking a look at the commodity space, if you look at gold in general, there's nothing terribly compelling here about gold. But I think if you're looking for protection from the ills that plague world central planning and the Fed with quantitative easing and all that stuff, which I've talked about in the past, this is maybe a decent time to buy some protection with gold. You have it down here. It's sort of made a higher low, which is a constructive thing to see. It did go back and fill this gap a little bit, which isn't that healthy, but as long as it continues to hold higher, I think you can potentially feel good about buying some protection here and buying. Gold is essentially a fear index at this point, and there's not a lot of fear in the market. And these are the type of times when you want to be buying things like gold and potentially VIX. I wouldn't necessarily be buying the VIX. I think it's a flawed vehicle, but I think I would feel comfortable buying some gold here as a longer-term hedge. We're going to take a look at a couple quick hits to close things out here. One of the ones we're going to look at is Boeing, which I know Scott talked about it when he reviewed his 2013 predictions earlier this week. But there was more news this morning that they expect Boeing's Dreamliner to be up and running over the next few months after they resolved most of these battery issues they had with the ion batteries. If we go take a look at the chart, Boeing has been on a monster run. It was a call on Scott's 2013 predictions. It's worked out tremendously well. It's up here. It's actually his target on the trade for the year was 85, and we've basically gotten that target. But based on the strength, maybe you have to readjust your expectations a little bit and potentially look for Boeing to have more upside. We take a look at the weekly. It still has room up to its all-time highs, and if the Dreamliner is as successful as it was once hoped to be and once touted to be, then I think you could see more upside in Boeing. And that's been a great play from his 2013 predictions. We're also going to take a look at BBY, which is Best Buy, and it's not a stock that we've talked about much here. I'll go back to the daily chart. We'll go back to the weekly too, because that's a good look at it. But look at this run that Best Buy's been on. I don't think anyone has even been aware. I mean, I certainly haven't been paying much attention to it, and I don't think traders really focus on this stock much because I think a lot of people wrote it off as a company that was going out of business. It's one of those brick and mortar retail stores that, that model is dying and Amazon's taking over and companies like that. But it shows what you can do when bearishness reaches a climactic level on a stock and you really have a herd mentality writing a stock off as a zero. You can potentially get moves like this. You see a move from 11 to it's basically doubled in 2013. I mean, that's a huge move. That's a 100% move. That's what traders dream about. And you look at a stock like JCPenney, and I'm not saying close your eyes and buy JCPenney right here, but this is another stock that its numbers have been horrible. The company continues to hemorrhage money. You have Ron Johnson, the former exec over at Apple, who is in charge of JCPenney right now, and I think everyone really thinks highly of him, but JP Morgan, I think, was headed in very much in the wrong direction. He hasn't been able to do anything to stop that train. But look at a stock like this. It's at lower levels. Sometimes I know Mark Sperling, this is not one that he's necessarily playing, but looks for these contrarian-type plays where, you have climactic selling in a stock and, could potentially get an uptick. But that's just a little bit of an aside about Best Buy and JCPenney. We're also going to take a look at the 3D printing stocks just as a note here at the end. These stocks are ones that, when they were trading up around, they had a 3-for-2 stock split, Triple D did, so the prices are a little bit different. But this is one that I warned about, and we warned about on Off the Charts a little bit, as one that I think the exuberance about these companies and about this technology is sort of at exuberant levels. It's at those levels that we don't feel good about buying when things go parabolic, and you get everyone saying that this is going to be the most revolutionary technology, and you have the PEG ratios of these stocks above 3, and you're really in terms of the price of the stock, they're way too expensive based on their growth rate. And we've seen a pullback here in Triple D. Yesterday, news that a couple of execs were selling the stock also weighed on it. And, that's more evidence that if the execs are selling the stock, that's often a sign that they think that the price is attractive here to take some profits and stuff like that, even though they could have gotten a lot better price. But I would just be very, very wary of these stocks. The 200-day moving average got touched yesterday in Triple D, which could be an area of support. I know Mark Sperling loves to buy the dip in these stocks, and especially at these levels, he's really looking at Triple D as one to buy off the 200-day moving average. And these are great momentum names. I know Mike Lee and Steve LeVay in the Momentum Room definitely talk about these and trade these often. So if this is your cup of tea, if you like short-term momentum trading in highly volatile names, then Triple D is an example of one you should look at. The other one in the sector is SSYS, and that one for the longest time was a lot weaker than Triple D. Triple D was holding up better than SSYS. Triple D is a bigger, more mature company, but you saw SSYS here. It was below its 200-day moving average, but it didn't really get a definitive break below and extend lower from its 200-day moving average, which is something we watch to see for potential more downside. And it's back up above, and now it's actually the stronger one in the sector. So that's something to take note of after a solid earnings report from SSYS. And if you're potentially looking to buy the dip in 3D printers, maybe you look at this one. Depends on what you prefer, whether you prefer to buy that stock like Triple D that's been hit really hard in recent sessions and you're looking for that short-term reversal, or whether you're looking to buy a little bit of, you've seen a bounce and a base and you're looking to buy that strength. Well, that'll do it for today's morning call. Thank you for joining me. I think a lot of people are going to be focused in the virtual trading floor today on Apple. Some days it doesn't necessarily warrant it recently because the action has been very lethargic and it's failed at key levels. But today, if it does indeed hold above that 440 level and break out of that downtrend, and you have that sort of buy the news event after the Samsung Galaxy launch, I think that's definitely something that could be in play, and now could be the time that Apple actually gets that bounce that a lot of traders have been looking for. Thank you for joining me. We'll see you out there on the virtual trading floor.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.